Bitcoin, again, basically a flattish day, but the key on Bitcoin is this, right? So if we look at Bitcoin, we can see that it's above that pivot line, which we've talked about. It's confirmed, so that's a positive. And so the way you look at this is this.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, let's discuss these topics and more.
If it pulls back into this level, which is the pivot line, it's now confirmed support. So you can buy that for that next move up to 68,000, right? And that's your next key level right there. If it continues up here as a swing trader, and only as a swing trader, I would consider looking for a pullback and a short off of it. Now, the question is, would I buy it here? And the answer is no, I'm not going to be a buyer here because, again, your risk reward, especially with the stock market being a little bit in this weird area where logic dictates it probably shouldn't rally, but it's still rallying because of money being lured in from the sidelines. And I do worry that the correlation with Bitcoin continues to mean that if the stock market craps out, it may take Bitcoin down with it, even though I love Bitcoin over the longer term. All right, but either way, for me at least, the pivot line around 60 to 61,000, that would be a buy unless you confirm back below, in which case you stop out quickly, take the small loss, and move on to the next trade. All right. Couple other charts to go over here. Gold's not doing a whole lot today, basically pausing. I'm not going to waste our time on gold. But if we look at silver real quick here, let's take a look at silver. Maybe pop over to the chart real quick here. We can see that silver is coming right back on. So this is what we call kind of a bull trap, where it kind of lures people in thinking there's a breakout and it comes back in. Notice how there's no confirmation here. There was no confirmed breakout. It was what we call a fake out, and when the confirmation signal doesn't trigger. Sure enough, price is coming back in. I would look for further downside in silver here and looking at significant downside, maybe back to about $28 and change.
The SEC has approved options on BlackRock's Bitcoin ETF, potentially triggering new Bitcoin-related ETF filings and risk management strategies. An updated custodial agreement between BlackRock and Coinbase ensures faster withdrawals, enhancing trust among institutional investors. The approval of options on BlackRock's Bitcoin ETF allows regulated leverage, potentially driving more liquidity in Bitcoin markets, according to crypto lawyer Sasha Hodder. BlackRock's amended agreement with Coinbase ensures 12-hour processing for Bitcoin withdrawals, making ETF more efficient and reliable for institutional investors. ETF experts predict this approval could lead to a range of new Bitcoin ETF, offering more options for portfolio management and risk control. Jeff Park from Bitwise warns that Bitcoin's limited supply could amplify price movements as options trading grows, making returns on out-of-the-money calls even higher. The approval highlights increasing institutional engagement in Bitcoin, with the potential for even more advanced financial products soon.
Looking at oil today, let's take a look at oil here. Oil still never retraced back down to the key level here. So if we jump over here, guys, and just take a look at the oil chart, we can see that, again, you had your breakdown on oil. Standard action is a retrace. Look for it to just get a little bit higher here, and then that next leg coming lower should take hold. And again, that's classic methodology. Remember, if you break a level, so if we draw this in, so let's say you're hammering on support over and over again, support weakening breaks, there's a tendency for the flush out to occur, then it to come back to the retrace, what we call the scene of the crime, right? There's this need to come back and look at where it was. That's just the nature of charts and human psychology, and then it continues on its way. And by the way, that can happen on the same side on the opposite, where you have a trend line banging on the underbelly over and over, breaks out, and then retraces back here before making that bigger move to the upside. So these little tips, by the way, really, really important for good quality trading. If you want to be an investor or trader that doesn't just blindly follow the media narrative or the social media hype, and you want to actually understand probabilities, that's what we do here at Verified Investing, folks. It's all about probabilities. So the idea is we're not going to win on every trade. I certainly don't. But if we just follow a methodology that is probability-based and we're consistently taking, let's say, 70% win rate trades, well, Well, yeah, if you take one trade, you could lose on it, but if you take 100 trades, approximately 70 out of that 100 are winners. And that's really the end game here, folks. Again, no one being perfect. We have to understand that. No one should be saying they're perfect out there. I certainly, as I said, am not. But there is a method to the madness that actually works when you cut out emotion, meaning you shut off that social media nonsense, the narratives of the main street, right? And you focus in on the charts. All right, last chart I want to show you is one that so far I have gotten wrong. We'll find out again if I continue to get it wrong. But right now it is natural gas, and natural gas continuing to push up here. Now, I told you I entered a short on this the other day. Today I added to that short, so my short the other day was right here. We got a little bit of a pullback, but I didn't cover my short. It wasn't a big enough gain, plus it was a small starter position. And what I did today was added right up here. And so this is the methodology that I employ because it ultimately smooths out the risks a little bit. And what I mean by that is you basically have a level here, but anytime I go into a trade, I always think to myself, I might be wrong. And by thinking you might be wrong, you naturally put less money at risk. So you start small. Now it breaks up. I add to that. My dollar cost average is right in the middle. And I even have my next add level up here, which would bring my dollar cost average up. And the idea is that the bigger you run up, eventually the bigger you fall. Now, I don't know if it's going to be at this level here now, where we dump out tomorrow, or if it's up here, but I have a plan for that, right? And so that's the idea here, is always go into a trade with a plan. The key is, when you get punched in the face, they always say, what's your plan or how do you react? And ultimately, this is the key. Understanding that you can sometimes get in trades and be wrong and still ultimately maneuver your way out. Because again, when you get in a trade and it goes against you, do you sit there and say, oh my goodness, I invested my whole account, so I've handcuffed and I literally am at the mercy of the chart, of the commodity or the crypto or the stock? Or do you say, you know what, glad that I only went so small because I knew this could happen so I can maneuver. And remember, even if you're a Hall of Famer, Hall of Fame traders and investors bat 70 to 80%. That still leaves 2 to 3 times out of every 10 that a chart is going to do something that you don't expect. And so the question is, what do you do in those scenarios? How do you react? And that is what makes a true trader and investor, a profitable trader and investor.
Bitcoin dominance has reached a resistance zone at 60%, with a potential decline signaling a shift toward altcoins. A rising wedge pattern in the dominance chart and falling stablecoin supply ratio, SSR, point toward increased buying power for altcoins. The Bitcoin dominance chart, which measures BTC's market share against all cryptocurrencies, has pulled back after reaching the 60% resistance zone, suggesting a potential altcoin rally. Crypto analyst Ali Martinez highlighted a rising wedge pattern in the dominance chart, which could indicate BTC dominance has peaked, leading to a capital shift into altcoins. While the index is rising, a score of 75 is required to officially enter altcoin season, making current trends encouraging but still developing. The downtrend in the SSR suggests stablecoin market caps are rising, indicating more liquidity is available for altcoin purchases. With buying power increasing and Bitcoin dominance potentially declining, the stage could be set for a strong altcoin rally. Bitcoin is nearing the crucial 200-day simple moving average, SMA, a level that could trigger a major breakout. Institutional interest and Bitcoin ETF developments are fueling optimism for a potential rally, but cautious trading reflects uncertainty. Bitcoin's price action in the coming days will be critical in determining whether it can break through resistance and start a fresh bull run. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.